Our next guest, and that is Dana M. Peterson, Chief Economist at the Conference Board. Thank you so much for your time, Dana. I mean, there's just so much to get through this week. It's extremely busy. We've got the Fed, we've got the government shutdown, we've got trade, and we've got earnings. But let's just start off where Marley sort of left off there with that introduction about the Fed. I mean, all eyes are going to be on what Powell has to say. Not exactly what they do, because I think the markets have pretty well priced that in at this stage. But what sort of language and commentary are you looking out for from what you're hearing as far as what the Conference Board research is showing?
Yes, everyone will be wondering if the Fed's going to cut interest rates again in December. Now, that's going to be a big if, especially if the shutdown continues and there's a lack of data. Like, we haven't had data for October and now heading into November. And so the Fed is really relying on data from the Federal Reserve System, from the various banks that have inflation measures and manufacturing measures, and also from the private sector, including on the labor market and also consumer confidence.
Some economists argue that you don't really need official US government data to tell you what's going on in the economy right now, given all the other indicators. No doubt it is a very important metric. And, I mean, Powell himself has called it the gold standard. But, I mean, what are you seeing out there right now?
Well, we're still seeing and hearing that CEOs are kind of on hold. They're not really investing. There's still a lot of uncertainty out there. Tariffs are still being negotiated. There's still a lot of regulatory issues that have to be sorted out. And in that mode, they're not hiring, but they're also not letting people go. And so far, consumers have had that cushion of actually working, and also wages are rising at a pretty decent clip. But inflation, we think, is going to continue to pick up, certainly as the tariff effects from earlier this year start feeding through. And that's really going to impact the economy. Even if you don't have government data, we're just talking to consumers and we're talking to experts and CEOs to ask them what they're seeing in their own industries and their own homes.
What are CEOs seeing out there? Because, I mean, we're just obviously grappling with this headline in the last hour or so that Amazon is going to be looking at 30,000 corporate job cuts. I mean, last Friday it was GM and Target. We've heard from a number of these big companies. What are you seeing out there?
I mean, these are definitely startling. 25,000 jobs, that's 25,000 people without a paycheck. But when you look at the grand scheme of things, there are 160 million workers in the United States, and most companies are not letting people go. And where we do see layoffs, some of it's all consolidating that was already happening, or it's in the tech sector where they're trying to move into other technologies, and they need to let some people go and rehire some people. And they're also looking at AI. But for the most part, I'd say like consumers have been protected by the fact that CEOs, while they're not really investing, they're not hiring, they're not letting people go either. But they are very worried about geopolitics and certainly a lot of the risks that they're seeing around policy.
How do you join the dots then by what you're saying with regards to a lack of visibility on the jobs front with respect to AI, also when it comes to geopolitics with tariffs, etc., where these companies are trying to look for areas in the supply chain to try to eat it, with the fact that most of the S&P 500 companies that we're hearing from, and we've got above 80% rate of beating expectations right now. And, the guidance doesn't look too bad. We've got these companies throwing out these eye-watering sort of CapEx numbers. The next test is obviously going to be the Mag 7 this week. But as I said, how do you draw the link between that?
Well, certainly the tech companies are doing well, but the tech companies do not reflect what's going on in the real economy. Indeed, the stock market typically does not reflect what's going on in the real economy. While I would say that even in the absence of government data, we are seeing some areas that are showing a reflection of higher inflation from tariffs, and consumers are pulling back or even talking about pulling back. But again, we haven't you hear about these layoffs, but they're still pretty small and they're not broad. And so that means most consumers are still working. They have the capacity to spend. The question is whether they will spend. And as long as there's uncertainty and they see prices rising, many consumers are going to pull back. And that's what the Fed is seeing. And that can lead to layoffs and hence the intensification of downside risks to the labor market that's causing them to cut rates right now.
Okay, yes. I mean, a lot of these companies, their customers are companies, but they also need consumers. And so that's very important, very much to highlight. Just how are you thinking about this government shutdown? I mean, now dragging into almost, it's been a month. When some of these workers have not been paid, it sounds like they're sort of redeploying cash from programs to try to cover, military salaries. What's your assessment of what's going on right now?
Sure, it's certainly getting more and more difficult every day for the government workers who are furloughed, have been let go, or those who are still working and not getting paid. Indeed, there have been some workers that have been paid from pockets of money here and there. There are a lot of questions about the legality of that, but nonetheless, it's unlikely that these big infusions of cash are going to be repeated. And certainly, we're already seeing cracks around the system where some of the essential government workers are starting to call in sick. And so it's really about, what are the things, how uncomfortable is it going to get for Americans before politicians and policymakers get back to the table and discuss how to move forward. And it's going to get worse as each day and each week goes forward.
So on that note, do you and the folks over at the conference board have a date on the calendar with a circle around it as to when it really, really screams alarm bells?
I think it's next week, Sunday, really, or Monday, when you have a whole group of government workers that are essential who may not get paid, including the military. Now, some policymakers have suggested that yes, there could be some money somewhere, but again, it's not really clear. And then also SNAP benefits are going to run out on the 1st of November. And we have many, many people, families, consumers, elderly people, children who rely on SNAP benefits. And so that's also going to put a squeeze on politicians if their constituents are hungry. And so I think next week could be a pivotal time. But really, we need to watch the airlines and see how air traffic controllers and also members of TSA behave over the next few weeks. They've been working without pay, short labor shortages as people are calling out sick. And if we see the airlines grind to a halt, then that's probably going to stoke some action.
Right, yes, and particularly ahead of what is going to be a critical holiday season as well. That is very important to highlight. Dana, it's been an absolute pleasure. Thank you so much for joining me today in that conversation. Dana M. Peterson from the conference board there.